I hope everyone is doing well and had a good day. And in this video, I'm going to review the Emini 5-minute chart for Friday, September 12th, 2025. As you can see, small gap going into the day. When that's the case, you can assume that the prior trading session, the overnight Globex session, was a trading range because the gap is only small. So while the range is probably bigger than this distance, the market went sideways for the most part. Now, as far as yesterday's high and yesterday's low, most days, and I should say most bars, are breakout bars. The minimum requirement or definition for a breakout is a bar that goes one tick above or below the prior bar. And you can see just looking at any chart that most bars are breaking out of the prior bar. And that's true on any chart. It doesn't matter if it's the 5-minute or the daily. And since that applies to any chart, we know that going into any day, that the prior day's high or low is probably going to get tested. Now, because if we take into consideration the range of yesterday and where the day is opening today, it's clear that if it's likely that the market breaks out above or below the prior high or low, then it's more likely going to be the high at this moment. We have a bull trend that evolved into a channel, maybe a trading range at this point, and there's still directional probability for the bulls. On a higher time frame, this is just a bull breakout and a bull flag, and it's more likely we'll get trend resumption than trend reversal. So to me, it looks like it's more likely we're going to test yesterday's high than yesterday's low. But you don't know how far we may fall before testing yesterday's high. Going into the day, we have a couple of legs down, maybe 3 legs if you count 75, 1, pullback 2, pullback 3, 3 pushes down to support on bar 1. So the downside here might be limited. And again, I think at some point we'll probably test yesterday's high. The buying pressure at this point, probably not enough to be buying. But again, the downside might be limited. So maybe the bears have one more leg, but we'll see. So the next bar 2, breaking out, but big tail, showing buying pressure and not very strong for the bears. Looks like it's closing near its midpoint. Not as strong as it could be for the bears, but still not very strong buying pressure for the bulls. Inside bar 3 bar micro channel on the open, maybe a little more to the downside is possible, but we're really going more sideways and we're testing support. Remember, after the breakout and the channel that has at this point evolved into a trading range, if the market's in breakout mode, trading range, you want to buy low and sell high. Right now we're testing support, which is the lower third. So in general, you want to be looking to buy here. So buyers below 3, outside up on 4, still a trading range bar on 4. Not the strongest buy in the world, but probably okay to exit shorts above 4 and okay to buy above 4, expecting that 3 or 4 legs down will correct and we may reverse up and test the highs of the range. 5 low 2, short for the bears. We had a bear breakout, pullback, low 1 short below 3, low 2 below 5, but it's a weak sell signal. It's a doji and it's at support, probably buyers below. And in this case, we did not even go below the bar, and 5 ended up being a buy close bar, leading to a bull breakout 6. 6 likely to get a second leg. It's leg 1 coming from the bottom of a trading range. The problem with 6, we're testing some resistance. We had a bear breakout, pullback, and a second leg down. When the market pulled back here, this created resistance. So instead of buying the close of 6, even though 6 will probably get a second leg up, it might be better to look to buy a pullback. Maybe you want to buy in the buy zone of bar 6 and then maybe buy breakout points like the bar 5 high, maybe even the low of bar 6. Deep pullback 7, so breakout, implied pullback. Bulls still should get a second leg at a minimum, test the high of bar 6, and then bull breakout 8. The problem with bar 8 is now we have several legs up and we're testing resistance. Not quite at the top of the range, but you could count 1, 2, 3 pushes up, or 1 pullback 2. And after you have a couple of pushes or legs to the upper third of the range, it's better to look to sell. Remember, trading range, buy low, sell high, and scalp. So rather than buying bar 8, might be better to sell up here. 9, a big bear trend bar. Good bar for the bears, but the context, not very good. Testing support and overlapping the prior bars, not really breaking out below all the bars to the left. So the bears really need to follow through here. And it's a big bar, so big risk. If you're selling bar 9, stop above the bar. The risk is big, you need high probability. And selling at the low of a trading range, selling at support, is not high probability. So 9 might be a buy the close bar. So 9 did not get follow through, reversal on 10, and follow through 11. Strong enough reversal and follow through for the bulls for a second leg up. Traders will probably buy in the buy zone of bar 11, and if we get there, they'll buy below bar 11. It's a bad low 1, low in a trading range. Pause bar 12, it's an inside bar, probably buyers below, maybe sellers above, but the bull reversal and follow through 10, 11 should get a second leg up, or at least it's likely to. 13 implied high 2, so bull breakout, reversal attempt, continuation attempt, failed, second reversal attempt, fell above the prior bar and failed. Now we have a second continuation attempt, and then this is maybe a truncated wedge on a smaller time frame. 3 pushes down, 1, 2, 3, where the third push does not exceed the second push. Does this breakout 10 and 11 have a second leg yet? To me, it does not. So this is an incomplete price structure. Breakouts usually get second legs. Look at bar 78. Breakout, pullback, second leg down. 6, breakout, pullback, second leg up. Reversal and follow through. It's a breakout, pullback, but no second leg. So as far as selling here, really not ideal. This might be a wedge bull flag, more clear on a lower time frame. So we're probably going higher. 15, maybe it's a high 4. We triggered the buy above. 14, not particularly strong inside bar, and many dojis, lots of overlap here, so tight trading range. But if I had to choose always in long or always in short here, it's probably always in long because the bulls are still likely to get the second leg, and on a smaller time frame, this is a bear channel, 12 through 15, several legs down. So 15 is probably a buy the close bar. 16 bulls getting the breakout, maybe getting their second leg here. What about selling 16? Is it 2 legs up to the top of a trading range? It might be, although it's not clear if we're at the top of the range. And maybe it's a bull channel, and maybe there's more to go. The other thing is 16 is not really a symmetrical second leg with 10 and 11. Even if we measure from the low to the high close, so from the low of 10 to the close of 11, and even if we place it here on 15 or even down here, 13, there's still room to the upside. So maybe a little premature to be selling here. There might be profit taking at this high close. There should be some resistance here, maybe hesitation, but not enough to be selling. And you can see it hesitated and pulled back. Traders, instead of buying the close 16, they bought the pullback. And now 16 is getting its own second leg, which is a bigger second leg of 10 and 11. And now we've got a couple of pushes, maybe more reasonable to sell here, but still we don't know if we may test a little higher. And again, magnets above, you've got yesterday's high, which is probably going to get tested at some point. So maybe not ideal to be selling here. 18, 3-bar micro channel, but now we have a symmetrical second leg, and it's nested. You got two bigger legs, one pullback, two, second leg subdivided, one pullback, two, and even here is one pullback, two. Now we're higher in the range, so as far as here, 3-bar micro channel for the bulls, but now you're at the upper third of the range. That's the sell zone. Not ideal to be buying up here. Your risk, maybe it's below 15 or 16, so relatively big risk. You're buying at the top of a trading range. That's not a high probability, so it's hard to justify buying here. Bulls are probably going to start reducing their position sizes by taking profits. That's going to contribute to the selling. The bears are always selling, and the bears have the argument that it's a nested two legs up to the top of a trading range at this point. So bears will sell 18. 19, bear breakout. Now, 19 is a bear breakout in leg one at the top of a trading range. So very likely that 19 gets a second leg down. But as far as selling the close, 19, it's really not ideal. You're selling right at the moving average after the bull micro channel. The micro channel was strong enough, it trapped traders below, and there's probably going to be at least an attempt at another leg up. So rather than selling 19, you're probably going to get hesitation at the moving average, and there's buyers below from the bull breakout. So rather than sell the close 19, maybe look to sell a pullback. But it is likely that 19 gets a second leg down. Leg one, bear breakout, a pretty strong bar. But instead of selling the close, it doesn't really have that sense of urgency. It might be better to sell the pullback. 21. You can call it a double bottom. Maybe it's a double bottom bull flag. But if you're buying 21, you're buying with not much room to the upside. Again, this is still maybe the upper third of a trading range. And now we might have 2 or 3 legs up, depending on how you count it. One's a push, bar 8, bar 18. So you can count 3 legs up. You can see a double top, 77 and 18, lower high. And it looks like the market's in a trading range. Bars below the moving average, above, below, above. Bulls not getting sustained buying with open gaps. It's probably not a trend. So as far as buying here, 21, it's really not ideal. There's probably sellers above. Remember, 19, the whole idea with trading breakouts and second legs, the logic behind breakouts is trapped traders. If you're a bull, let's say you have a micro channel system and you see a 3-bar bull micro channel, you buy the close 18 and 19 is your entry bar. The bull who bought the close of 18 is disappointed. It's not the smartest trade in the world because it is high and a late leg in a trading range. But let's say you bought the close 18, you're using a wide stop, maybe down below 10, and you're willing to scale in at the high of 15, the bad signal bar. Your average entry price is the purple line, the midpoint between the close of 18 and the high of 15. Remember, you're trapped. You bought the close 18, 19 is your entry bar. You're disappointed, but your stop's all the way down here. You're scaling in at reasonable support. Market bounces, tests that midpoint between the two entries, and what happens? The bears sell the 50% pullback of the bar. The bulls who got trapped scaled in. They're able to avoid a loss. And that selling from the bulls and the bears contributes to the second leg down, which the bears ultimately get. 23 is a bad stop order. Buy signal bar, maybe it's a high 2. So there's the rally, maybe a pullback, high 1, high 2, but it's a bad signal bar. And as far as the context, we're still closer, or maybe it's the middle of the trading range. So as far as buying here, it's really not ideal. And then 24 went outside down, bears getting their second leg. Strong enough selling that this probably needs a second leg down as well, but we're getting to support, so the buy zone. Selling down here, this is not ideal territory for selling, but there's probably a little more to the downside. You can see 25 testing the close of 9, which trapped traders. Traders who sold 9 trapped on the reversal and follow through. So that becomes support, as you can see here. But is 25 enough to reverse all of this? Maybe, but probably not. It is 2 legs down to support a trading range, but 25 is only a doji. Probably need a trend line break and a retest before there's any reversal. So continuing lower, several legs down, 1, pullback, 2, pause, maybe 3, down to 27, 3 legs down to support on a trading range. Hard to justify holding short here until the bears break far below all the bars to the left. You should assume it's a trading range, buy low, sell high, so look to buy down here. Still, this is a fairly tight channel, so the first trendline break is probably minor. Reversal and follow through inside bar 29.30. This will probably get a second leg up, but it's the first trendline break, the tight channel. So we probably need a test of the lows. Instead of buying the close of 30, maybe buy below bar 30. And then we got the test, testing the lows, and then reversing back up 3-bar micro channel, strong enough breakout from the bottom of the range for a second leg up. The structure of this 3-bar micro channel is probably 3 pushes on a smaller time frame, 1, 2, 3. So instead of buying the close 34, maybe buying a pullback would be better. Maybe we'll test the breakout point 30 high, the moving average. We did that on 35, got continuation 36, but traders are probably going to scalp at a new high. It's a channel on a smaller time frame, so they'll buy a pullback, scalp out 36, and we're approaching resistance high in the trading range again. Now, it's not perfect, it's not technical, but this also might be an expanding triangle. It's not perfect because 28 did not go to a new low of the day below bar 2, but there are trending lows through here, 1, 3, 4, 10, 28, and then obviously trending highs up here. So it's possible we rally to a new high, test yesterday's high, but looks like it's a trading range day. So even if we get up here to a new high of the day and yesterday's high, there's probably sellers up here, and it might be an expanding triangle day structure. So you can see the reaction to resistance there, but strong enough micro channel for the bulls. This first reversal is probably going to lead to more buying. Reversing back up, but now you have trap traders above, probably disappointed traders at the low of 37 and the high of 37. So the upside here might be limited. You see the selling pressure, but another micro channel, 42 is a weak sell. It's a double top, but the approach is too strong. Probably buyers below 42, second leg up, likely. Also trap traders, 38 close. The bear breakout traders sell, they get trapped, and that creates support here. So you expect a bounce. 45 a strong bar, will probably get its own second leg. But it might be a small wedge, 1, 2, 3. The sell never triggered, bulls getting more follow through. 4-bar micro channel, second leg up, likely probably buyers below 47. We test below, and then the bulls get their second leg, go to a new high, probably get profit taking after 52. So there's some hesitation, but the breakout closed above the breakout point here. So that becomes support. So 53 might be by the close. Second reversal attempt, but it's minor. This all needs a second leg. Bulls trying hard to get their second leg, but it's getting very sideways, tight trading range. It is still a channel. The bulls are getting higher highs and higher lows. Look where we are in the overall day, in the structure. Testing the high of the day, getting close to yesterday's high. It's more of a sell zone, and we've got several legs up, maybe 4 legs up. So as far as buying here, not ideal. 60, 61 bull breakout, but you're 30 bars into a rally on a trading range day. So is 61 a measuring gap? Is it going to lead to a measured move up and more trend? or could it be an exhaustive buy climax? Small follow-through bar, 62. Markets breaking out above yesterday's high, but again, looks like a trading range day structure. Is it going to break into a strong trend, 60 bars into the day? It might, but it's unlikely. And there's that possibility. It's not a great shape. It's a possibility of the expanding triangle. So if you're buying here, you're probably going to be quick to exit. 63 micro double top, up, down, up, down. 63 is enough to exit longs. It's aggressive to sell, but also okay. You're getting far above the moving average. Structure, you got 4 or 5 legs up, possible exhaustion. Exhaustive buy climax, traders will sell. Put a stop and measured move up, betting the bulls will not reach their target, and that will come back and close the gap to the 60 high and the low of 61, which we did on 64. Now this still probably needs a second leg up. This is a trend line break, but we still might need a test of the highs. But 64, it's a bad stop order buy. Probably sellers above 64. Another bull bar, 65. Consecutive buy climaxes. As far as buying, it's really not ideal. If we think about, this is a bull channel line, 65 testing the bull channel line, but 75% of the time channels evolve into trading ranges and you get a bear breakout of a bull channel. Usually you don't get a bull breakout of a bull channel line and then an even stronger bull trend. And the day structure plays a role with that as well. Look at all the overlap today. It looks like a trading range day. So as far as this becoming a strong trend, there's always the possibility that it can, but it's unlikely. 65 did not get follow through. 66 reasonable, second entry short, and reasonable to exit longs below it. And then bears getting their breakout, 69. Bear breakout, really not ideal for looking to buy here because we're still high in the day's range. If it is an expanding triangle, it's possible we test the lows. And what's the daily range at this point? 21 points, so that's about half the recent average daily range. It's really not a huge daily range today, and it's not impossible that we get a move back to even the midpoint of the day, but even getting to the low of the day is only about half the range of a recent average daily range. 3-bar micro channel, weak stop order buy 70. It's probably sell to close, sell above, and then we're getting a sell to close, sell off here. Bigger bar 73, okay to take profits. It's a gift bar, but we're still not quite at the lows. We may have to get here. So okay to look to take profits down here. A couple of big bear trend bars, but at the bottom of a trading range day. Testing support. So probably good for taking profits. If you're selling, your stop is far, the risk is big, and you're selling at support. So big reaction to that support. 75 is probably okay to buy, maybe buy a pullback because this breakout probably needs a second leg or at least an attempt. So there's probably going to be hesitation, not just a reversal and follow through on 76. But 75 is a very strong bar at support. It's possible. As far as buying the close 75, it might be better to buy a pullback. But again, it's late in the day. Bar 75, this is more theoretical, not great for trading. 3-bar bull micro channel, deep pullback, but probably buyers down here. Remember, bears selling closes get trapped 75 through 77, and that creates support down here. Bull breakout should get a second leg, deep pullback, probably buyers down here, and ran out of time. All right, that's going to do it for the end of day review today. Thanks everybody for watching and listening, and I hope everyone has a great weekend.